What's up, traders? Happy Friday. So today I'm going to try to have a fun teaching lesson. Also talk about the macro assessment of the market as it is. The fun lesson is going to be talking about implied volatility. I had some people in my Discord ask, what was I talking about when I brought up the point that MicroStrategy is trading at the lowest IV, the lowest implied volatility that it has been in the last year. Why does that matter for options? Well, we're gonna look at that. We're gonna look at the VIX and some market timing that has been very, very affected over the years. I want to share that with you guys as a tool and look at basically what it means for implied volatility to be low and why that makes it good to buy options. So hang out for the music and we'll be right back. We'll let people filter in. All right. We'll let people filter in as we get along. I've got the VIX up here. It's the volatility index, or it's the volatility of the S&P 500 index. That's going to be real important in today's discussion. I want to do a little bit of a teaching session today about implied volatility. I think a lot of people that have maybe experimented with options, that trade with options, don't really understand just how important implied volatility is to trading options. And we're getting to a point now where I'm noticing a lot of stocks are trading at very low IV, low implied volatility, which means that options are cheap or relatively cheap for them. And that means, if we want to buy low, sell high, it makes a lot of sense to buy things when they're cheap, including options, and sell them when they're expensive, when IV is high. Now, what the VIX does is it shows us a is the 30-day average implied volatility of the S&P 500 index options. That's what it does. That's the academic definition of it. But it's got a lot of real cool features. You notice I have some lines up here I'm going to talk about here in a little bit for that actually give us some really good market timing. I want you guys to see this and pay attention to it. Pay attention to it. I'm going to clean them up right now because we'll start over and look at them. But also, what's going on with the broader markets? I'll give you my opinion on it. Right now, it's everything's kind of sitting on the precipice, and I have been sitting here kind of bored the last couple of weeks, as I'm sure a lot of people are. In no matter what, if it's equities or if it is crypto, it's almost like the market is waiting for something to happen, some shoe to drop, some new news to come along. I don't think people want to make a play, and you can see that in price. It's just you don't have a bullish trend, you don't have a bearish trend. Whether it's the S&P 500, whether it's even the Nasdaq, we just can't make a new high. And that's what I'm waiting for. I'm waiting for price to tell me what's going to happen. I don't have. I actually got asked this week by a friend. It's like, what do you think the economy is going to look like in the next year? And I was driving at the time, so I thought about it a good bit. And he asked it in the context of politics. He asked it in the context of the things that Trump is doing in regards to government spending, cutting a lot of government spending contracts. And I make it a point to never let politics get into my trading or investing. It's a bad idea because I have friends over the years that have sold everything when Trump got elected and market went up. I have friends that sold everything when Biden got elected and market went up. I think it's just, you got to remember this, okay? No matter what you hear on the news, no matter what anyone's opinion might be, the highest probability in any given year is that the stock market is going to close higher than it opened. Just take that to the bank. Just remember that. Sit in your head. Yes, there's going to be exceptions. That's what statistics are all about. It's not 100%, but it's a high probability. Something like 80-something% of the time the stock market goes up in a year. It's 70, 80%. Don't have that with me. Don't quote me on that. But then the other statistic that I always think about is in any given year, you have 2 to 3, 5 to 10% corrections. And those are your buying opportunities. And we, of course, haven't had one recently. We had one, well, I take that back. We had one from the top around December to January the 13th, which was about a 6%. So we can actually say that was our first one of the year. That was the first pullback. But now we're sitting up here at the top. What we need is another pullback or we need a breakout. That's what I'm waiting on. I want to see a weekly bar, one of these weekly candles, close above this all-time high. Looking at the futures right now. And once we get that, I'm going to get very interested in getting bullish, but not before. So I'm kind of sitting back, waiting on that cash, pulling about 4.5% in a money market account, like a lot of people. And that's what a lot of people are doing, really. They just got people that are looking to invest. They're sitting here waiting, just like I am. I am basically doing what the market's doing. I have, in the past live streams, talked about the stocks that I bought. The ones that I've kind of gone into this year, one of my biggest allocation was actually NUE, which is an American steel company. Now, there's talk this week about the tariffs being good for them, talk this week about the tariffs being bad for them. I don't know. I just know that it is going in the direction that I wanted to over the past couple of weeks. The other kind of contrarian plays that I've made were in candy. There's been a huge negative bias towards it because of Ozempic, because of RFK, and I like to go against these narratives. And so Hershey's and Mondelez are two that make some very similar patterns. And and then there's another trade from very early in the year, MMC and LRCX. That's one actually from the end of the year. So those are the stocks I have really coming in as trading-sized ones. Tesla, we're just kind of hanging out. Had quite a little dip this week that it's recovered from. So I managed to add on a little bit of a covered call there. And, of course, got to talk about crypto and Bitcoin. I made a post about 2 weeks ago about the different positions that cryptocurrency are in based upon the daily Ichimoku cloud. But let's go through the actual crypto list here of all the majors by market cap. I'll go alphabetically here, and you can tell me what you see. And if you followed my live streams before, you've seen that I've talked about price versus the cloud with momentum lagging span Chicago. That's that purple line right there, confirming if it's bullish or bearish. What you want to do to identify a trend, pretty easy here to see. Price gets above the cloud at the same time the momentum, boom, you got a bullish trend. That is a trend following strategy. And I've done the research on Bitcoin going back all the way to 2011. And if you had followed that strategy, going long whenever you saw it coming out of the cloud confirmed, and then going back to cash whenever it breaks to the downside the opposite way, you would have about 7 Bitcoin for every one, as opposed to just hodling, as people would say. If you just hodled 1 Bitcoin, you would have about $96,000 worth right now. But if you had done that over the course of the last 14 years consistently, you'd be in, you'd be out, and you would have about 7 Bitcoins worth from doing this strategy. And what really works out and why that's important is because even though you have choppy periods of time where a trend following strategy will not work, you really, really, really want to, if you can, avoid the 80% down moves that Bitcoin is going to experience, because it has every time before. And we're getting to this point. I listened to a Bitcoin panel on Twitter, X, and they had a lot of experts on there talking about what their perspective is for the coming year. And I listened, and what's interesting about it is, of course, no one had a bearish opinion, but the bullish opinions were something like, 130, 140K this year, because everyone agrees based on the halvening cycle that, everyone talks about, the price cycle. You have a bearish phase and you have a bullish phase, and that kind of things based around the halvenings that, happened in April of last year. That's when the last one was. Everyone agrees that this year, 2025, is when that's going to end. Well, guess what? The current year is 2025. At some point this year, people know it's going to end. And if you're looking at an upside of 130, 140, that's what, 30, 40%, with a downside potential of 80%. I know I've been very uber bearish for various reasons over the last year, but the asymmetric risk reward is just not there. Now, it depends on who you ask. A lot of people, they say smartly, or they're trying to be smart, that the current administration is going to be all this kind of all this bullishness for crypto. But Cynthia Lummis, the senator from Wyoming, 2 weeks ago, she actually released her plan for the strategic reserve. It was on a Tuesday of 2 weeks ago. So that would have been what is it? Today is the 14th. It would have been on the 4th, I believe. It was the 4th. So February 4th was here. This day right here was the day that she actually laid out the plans on CNBC about what they were going to do, which is going to be buy 1 million Bitcoin over the next 5 years, 200,000 Bitcoin a year for the next 5 years. Now, they didn't say they're going to do that. They didn't say they're going to allocate taxpayer money to bail out Bitcoin. Build a strategic reserve. But she just laid out, this is what we're going to do, and the price did not move. That's a really bullish thing, don't you think? So I'm not sure what it's waiting for. But what I do know is that it's slowly getting to the point where it's holding these resistances, getting on the bearish side of the cloud, and getting to a point where momentum can get on the other side. And in the past, aside from periods where you have chop, this kind of situation, like here's the big bullish trend from 2023, got above the cloud, got here, momentum never got out, so it stayed bullish, and it continued all the way from down in the 20s up to the 70s. But what you want to avoid is the last cycle, which ended out here around 52 and then got all the way down into the teens. Bearish trend. Had a little chop right here, but again, you're out once again. It just works. It's worked for many years. A lot of people say don't trade Bitcoin, but if you go back and you test this, and I've done videos about it, I'm going to do it again when the momentum crosses to the bearish side of the cloud. But let's just go through a couple of these, and with that knowledge in mind that I've explained those rules to you. So Cardano, ADA, bearish side of the cloud, momentum is out, it's bearish. BNB, Binance Coin, it has already gotten out, came back up, held that as a resistance, that's bearish. Bitcoin Cash, trending bearish. Bitcoin, still neutral, I would consider it. Doge, bearish. Ethereum, bearish. Link, I don't know if anybody does it anymore. Link, bearish. Litecoin is interesting, still kind of just hanging out neutrally. That's interesting. Shiba, no. Where's Doge? I said Doge, yeah. Solana, on the bearish side. Tron, bearish to neutral. Monero, as I've noted in the past, is acting like we're already in a crypto bear market. And by that, I mean, I've observed over the last several years that, for the most part, Monero has been like a stable coin. But in times of bearishness, it actually outperforms Bitcoin. If you look at the XMR BTC crosspair, when Bitcoin goes down, Monero actually outperforms. It kind of becomes a stable form of value. And Ripple had a big move today. It's actually still neutral to bullish as well. And so everything's kind of, in flux right now, but you don't have that many actually fully on bullish trends. And so you got to ask yourself, where is the asymmetric reward risk? We've been in this bullish trend in crypto since January of 2023. So almost 2 years this has been going on. So what are you going to get from it? So, by the way, if you have things to ask in the symbols to look at, post them in the chat. Hey, so we'll talk about, hey, Norak, how and where to open positions like your MicroStrategy options. Well, we're going to talk about that. That's exactly what we're going to talk about. We're going to talk about implied volatility, because MicroStrategy is actually what made me notice it. So what's up, Wolf? No, you didn't miss anything. Merging channel, or am I? What do you mean emerging channel, Wolf? And yeah, sorry I missed you yesterday or last week, Wolf. But yeah, glad to see you. I tried to cut off the live stream at about 45 minutes, but I'll go to a full long hour. So merger arbitrage, we do. It's still there. We still have the merger arbitrage channel. It's just that it was kind of a one-off, because the only one that I saw that was a good merger arbitrage was the Activision Blizzard merger, which actually went pretty well. But I'm not really. I don't think there's been many mergers, or at least I don't really follow them that much. What books would you recommend? Well, for studying options, okay. Honestly, for studying options, I would say the best resource out there. And by the way, they used to sell classes on this stuff. The best options is the Tasty Trade Mike's whiteboard. Mike and his whiteboard. So remember this over here. Hang on. Can you guys see that in OBS? Yeah. Okay. It does. It does let you see that. So this one, if you do a search for Tasty Trade Mike and his whiteboard, this is something. It was years ago they did, but this has been one of the best options educations I have ever seen. What are they blanked out? They must have changed their branding or something. Or Tasty Live. Okay. I'm glad these things are still here. But this guy, he sat down and has all these things. This is the kind of stuff people used to pay for, by the way. But I learned a lot from this years ago. And you have to understand, the Tasty Trade people, they have their own exchange. Of course, they're very interested in people selling options because they get a lot of commissions off that. You do a lot more options trading if you are a premium seller, obviously. But they are primarily premium sellers, but they still have a lot of good information about different option strategies. If you just go through it explains all kinds of things that you may or may not need to know about. But I'm going to tell you what you need to know about implied volatility and why it matters today. And one of the things I'm going to look at is, of course, MicroStrategy, because that's what kind of drew my attention to it. Let me pull up the chart right now. So when I'm looking at options, sorry, I'll need to talk in the microphone. When I'm looking at options, I always want to buy low, sell high, not just the stock, but the options itself, because we could go bullish or bearish on it. This is Tesla that we're looking at. The top side is the price chart. The bottom side is the implied volatility chart. Okay? Any questions about that? If you got any questions, guys, make sure that you just ask me. I'm here to teach. I love to talk about this stuff, and I want people to learn because I think it's very valuable. And let's look at MicroStrategy. So the thing I noticed, and I posted into the crypto trading channel in my Discord, is that implied volatility on MicroStrategy, if you look down here at this lower color-coded graph, this is a color-coded graph of implied volatility that I coded up for Thinkorswim. I used Tastytrade stuff, but if you notice, when things are getting really kind of crazy, when price was really moving, implied volatility goes up, and when it's at red, that's at the highest relative implied volatility that it's been to the last 252 trading days. And that's measured either two ways, IV rank or IV percentile. And so IV percentile means that if you look at all the last 252 days, if it says 0%, it is the lowest IV of the last 252 days. Okay? IV rank basically just kind of gives you a different statistic, but it's very close to it. I just have both in there. But what it does is it takes everything, puts it into a value of 100, and it gives you a 1 to 100 score. Okay, so it's the same. It's roughly the same thing, a little bit different, but they kind of line up. You could choose one or the other, IV rank or IV percentile. It's just that some exchanges will give you the IV rank, some will give you the IV percentile, and so you can look at both. But either way, they all kind of align where as price, and here's what implied volatility does. Let's look at the word. Implied means that's what people are thinking. That's what people are implying. That's what the options are saying. They're implying. Volatility is the movement. And so implied volatility is what the market is thinking the movement is going to be. That's what implied volatility is. Why that matters for options is because options are basically buying insurance on the movement of a stock. And so if the market thinks that the move is going to be big, it's going to make sure you have to pay a lot for that insurance. So that makes the option prices, the premium you pay for the option, higher. Makes the options more expensive. That's why implied volatility matters. If the market is perceiving that there's going to be a big move coming up, it's going to price the options up. And that's why you'll see, like in the case of NVIDIA, pretty clear to see that around earnings, you'll start to see a sort of increase because that's when there's going to be potentially a big move. And so the price of options rises. The implied volatility rises as you get closer to options. That's why you should never buy an option the day before earnings. It's just fun ticket. It's just a lottery ticket because really the market has already put in what it expected, the expected move. Let's use a little bit of ChatGPT here because I want you guys to understand that context too. Wolf says, what are your thoughts on IPOs? Stay away from them. I've heard it's just gambling. Yes, it is. But others say that some companies, look, I can't see your screen on Discord. Am I not sharing my screen on Discord? Okay. Yeah, I should be seeing it on Discord. I think you can. Huh. Oh, you know what it is? Okay, that's because yeah. Okay, so I bought a new monitor. It's one of these widescreen monitors, and so on OBS, what I stream YouTube to, I can just show a section of the screen, but I can't on Discord. I have to. Yeah. I was wondering because I looked on YouTube and I could say that I could see that I see this. So, all right, let me try to figure that out for next stream. Thanks for pointing that out to me. I should have known that. Sorry about that. Okay. Yeah, because unfortunately, I don't think they have this in TradingView yet. Maybe they do. They actually started showing the options on TradingView. I need to look into that because then I could probably reprogram this for TradingView, this option or this IV rank percentile indicator, and that could be really helpful for people. So I might look into that. Okay, so all right, bear with me. Let's get ChatGPT up here to help us a little bit. So, and then I'm going to use some other. I'm going to keep showing you guys and teaching you guys different ways so you can kind of get this because it's really important. So ChatGPT. All right. So, let's see. Given that a stock is priced at $300 and the implied volatility is, let's say, 80%, what is the expected move for the next, let's say, 60 days? Okay, that's what's important. What the implied volatility suggests is what the market is pricing in within one standard deviation or 68% probability, basically the most likely scenario for the movement of a stock. And so we can do this with a formula, or I'm just going to cheat and have ChatGPT come up with it. And so what it's going to tell us is that it's going to give us the math for it if we want to do it, but really I just wanted to tell me. Okay, so the movement plus or minus, if you have an implied volatility of 80%, over the next 60 days is $97. That's a lot. It's about a little under about 30%. So about a 30% movement is what is expected, up or down. Remember, it's either up or down. And let's see, what if the implied volatility is 40%? And so it's obviously going to be smaller. It's not going to be $97. But what's going to be the difference? Is it going to be linear? No, it's because it uses a lot of fancy math. It's going to be $48. So not quite half. So you still have it's definitely more than half, about 60% of it. But you see how as the IV gets lower, what the market is doing is it's saying like, okay, there's a chance of a move coming, and so it's not going to charge as much, or people aren't going to ask as much for options. Okay, we're there so far. So implied volatility big means big move coming, potentially. That's what the market is pricing in, or at least that's what the options say. And so if you want to buy options, you want to buy options when the implied volatility is low, because that's when the market's not expecting it. If we go back and we look at, NVIDIA, we're getting close to earnings, and so implied volatility has started to rise. Tesla, people are expecting less and less of it. It's about average for what it has been for the last 252 days or last year. Now, you'll notice that the IV on Tesla is 59. On NVIDIA, the average IV is 53. But if you look at something like, GE, it's 24. So that's because you would expect Tesla or NVIDIA to move more than General Electric. Probably a better one to look at would be, Coca-Cola, which is 17, because Coca-Cola doesn't move anywhere. So the implied volatility is much, much less on, a blue chip, boring stock like Coca-Cola than it would be a tech stock. And so that's how it kind of works, is that the implied volatility on this stock is not going to be as big because it doesn't expect that move to be quite as big. Let's use Tesla as another example here to kind of show you and then explain how you can kind of figure out how that works. So let's bring up a current chart or current table of implied volatility for Tesla. So this is the current pricing. We're going to look at the 35 days because that's pretty close to what we are. Okay. All right. So the in-the-money calls for the 355 calls are trading at about 20. Let's call it about 23.80. Okay. That's the bid ask. That's about what it is. All right. And so let's see. So we go back and we look, that is today. Okay, that's where we are right now. And implied volatility is about 57. That's the average. But we can also go and we can say, okay, so what's the average for the March expiration? Yeah, it's about 58. So, right, keep that in mind. 58 is what we have as implied volatility right now today. Stock price is about 355. Now let's go back to this date right here, which is November the 11th. Pretty much the same price, about 351, but notice how much higher implied volatility is. Not only is it a very high relative one, since it's red, that would basically indicate that was about a 90% percentile. In other words, it was higher than 90% of everything before it. And that has an implied volatility of 75, roughly. And what we can do is we can go in Thinkorswim, and we can look at the Think Back feature. Love this feature. By the way, if you guys have questions, stop me when I get to a point. I love to answer questions. So, because I think this is really valuable for trading options. And like I said, options are getting cheap. And I'm probably going to start playing a little bit more options than shares because there's more room for upsides, asymmetric reward as implied volatility is low. Okay, so let's do. There we go. Okay, so this is the March, or no, we need to do the same days. So we were looking at 35-day to expiration for this cycle, and then we'll look at 39-day. Okay, and of course the implied volatility, average implied volatility here on the right is 72. So just to recap, from this day to this day, the price is basically the same, 350, 355. Okay, so the price is the same. Look, we need to understand what the difference is between the two options. Implied volatility right now is about 58% on average. Implied volatility back in November was 72%, much, much higher. Okay, and so if we look at the option chain, the in the money, the 355 or 350 calls were about $3,100, right? Same kind of days, they were 23. Big difference there, huh? So almost about a $700 difference for the same, basically the same number of days, basically the same option strike difference, but a $600 difference because of the price, the implied volatility. Now, here's another little bonus for you. How can we know what that is? Well, Vega is one of the Greeks for options. And of course, you have delta. That is every dollar of movement you get. That's what movement of the option you should get. Theta is your time decay. That's every day, how much money you lose if you own the options or gain if you sold them. And Vega is what every percent of implied volatility is worth to you. And so the Vega on these, 44 for in the money there. Vega here, about 45, roughly the same. And so let's do a little quick math. 58% with a differential of 72%. So that's about 14%. Bring up our calculator because I'm bad at math. 14 times 44 is basically $616. And what did we see? We saw that the in the money calls are about 23, let's say 24, and the in the money call is about 31, a little bit more. So yeah, that is the difference. Is the percent of IV times the Vega? That's what is going to be more expensive. And so, what happens if you buy an option? Let's look at MicroStrategy right now, because the price of MicroStrategy has just not been moving. It's been kind of sinking in. The options were not pricing in a big move, and so the options have gotten really, really, really cheap. Now, what happens if price then does start to move? Well, as you see when it is trending, implied volatility rises because a bigger movement is happening. And so if you have a movement, if you have an explosive movement in either direction, implied volatility is going to go up. And so whatever options you have, if you're on the right side of it, is going to be worth even more because of implied volatility. And that's why it is important. All right. Any questions about that? The insurance analogy really helps. Yeah, insurance is a good one. That's what options are supposed to be. Before people came in and started trading zero DTE options and around pandemic time with their stimmy checks, options were supposed to be for people to hedge their existing shares. In other words, if you own some shares, you would buy a put to see, to secure, make sure it didn't go down on you, or if it did, you would be insured against it. And if you were short, you might buy a call, or you could sell calls against it. There's all kinds of things we do with options now, but originally they were for hedges, and they were to buy insurance against it. Rick wants us to look at Intel. Sure. We'll look at the IV since we are. Intel is a stock that, by the way, I own some of it. I want to own more, but it just keeps on sticking out in this range right here. I think I saw some news today. Yeah, I don't really trade on news about how Taiwan Semiconductor is going to maybe try to start making some chips with Intel inside the United States to avoid tariffs. We'll see. It's like a lot of things. It is at a 20-year low. But overall, I'm just not that interested in tech this year. I'm not saying you shouldn't be. I think that there's just a lot of people want to be in tech, but then again, I tried to take a little hedge with Nvidia short, and that is not working. So I am wrong about tech. It does seem to have it's a cockroach basically. Cat. Oh, I love cat. I got cat. Caterpillar. Implied volatility is average. That's because it's not really going anywhere. Um, don't really see. I really wish this would have made a higher high. It's just that's not bullish. It's not bearish. It's not bullish either though. Got nothing. Got nothing going for it. Yeah, you're welcome, Rick. I want to own Intel. I have a small amount of it. I want more because it's at a 20-year low. That's the kind of stuff I want to buy. I'm waiting for it to give me a good opportunity, a good trading setup, a good risk-adjusted, lower time frame setup. And I've been waiting since basically last year, last August, when it made this huge, huge dip back in August. I've been kind of waiting. I guess if I would have just thrown some money at it, it would have been fine now. But yeah, Intel's an exercise in patience, basically. All right. So, any questions about implied volatilities? One more thing I want to show you guys when it comes to the VIX. So, Pega for Wolf. Let's go back to the trading view here. So, PEGA, Pegasus Systems. Ooh, I like a big dip like that. Let's see. Let's take a look at. Well, we need to go to the weekly to kind of capture. Okay, so the big trend. All right, so the big trend has been going up since October 2022. If I'm going to sort of do a 50% of this, it's very difficult because really you need to look at the whole trend, but it's actually a part of the trend from the all-time high in 2021 to here, which as you see, it has conquered pretty conclusively and then pulled back to. I like it. I like this. I like this a lot, actually. I want to put this on my radar because you see it conquered the 50% of the downtrend. Now it pulled back to it. It's hard to really find. I would say probably at this floor right here is where I would look for a 50. And you're there. Okay, I like it. Good job. Good job, Wolf. I like it. I like it. That's worth it. All right, and HBI, Hanes Brands. Ooh, I like it. You finding me some things that are going down. A lot of times people come in and they ask me, like, hey, they ask me about something that looks like a meme stock or a meme coin or something like that, and they're like, hey, what do you think about this thing that's up 700% in the last 7 days? Do I have to? Do I have to look at that? That is, I don't like it because it actually broke and opened below that level, and then on earnings it came back up and see how it, and it's not conquering it. That's kind of dangerous there. I like that less. Unfortunately. Palantir. I have 200 shares of Palantir that I bought at $9, and I haven't done anything with them. And I, of course, wish I had more. This is that's people have been coming to me over the last, several weeks and months asking me about Palantir, and it looks like this. I'm like, I can't, in good conscience, give you the go ahead, nor should I have to buy something that looks like this. And then it being the cockroach unkillable that it is, it goes and does this. I don't know what to tell you guys. I have mine. I'm not selling them. I don't see anything bearish about it. This is one of those things where you kind of have to be in at a lower price so that you're not emotional about it. I mean, look, this isn't me being smart about it back in the day. I just had a friend that was super, super bullish, and I probably bought the 9. I think it was maybe on this move right here. It's 844 somewhere. I thought it was 9. Either way, I sat in this thing for all these months, just all the way down to 590. So basically, almost like a 40% on what I put into it. That's why I was small. and back held it until it finally started doing this. So there's nothing really. I was like, oh, I bought it. No, I had a friend of mine that was like super bullish on it. I was like, okay, buddy, all right, I trust you that much, and he was right. Unfortunately for him, he didn't actually buy shares. He tried to trade this using options, and pour one out for him. I'm not going to pour it on my desk right here. He actually quit trading because in the period of here about mid 2023, he was doing really well with his options, but then he kind of doubled down everything that he made on Palantir options around here, and of course he got chopped the hell up, and he quit trading entirely, left our Discord, and we haven't been able to hear from him since. He's still alive. We checked his Facebook. He didn't do anything to himself. That's why I generally don't like options, is because you don't end up owning anything. You get cash, but what you want to own is the company, right? So while I'm talking about options now, getting interested in them, it's for a specific reason that IV is getting pretty low. But if you like the company, buy the stock, please. But Palantir, I mean, damn. Well, it may be connected to Trump, but as I said, I don't make the mistake of mixing politics and trading. I think that's a big, big mistake. I think that's a big, big mistake. I think Palantir is generally, what is it? It's an AI-based defense contractor. That's what's been explained to me. So it is not something I'm an expert on. It's just something. This is my general thesis of trading and investing. I want to get into a trade, an investment with low risk, and then I want to hold on to it forever. It's worked with a lot of things. Worked with this, worked with Bitcoin, works with the stock market, it works with various stocks. It's you. What you don't want to end up in is situations like it's really kind of easy to kind of avoid mistakes. Like when I talk about getting in at the 50%, well, then also you got to stay away from it. You got to cut it when it gets below that 50%. In other words, Zillow is one thing I always kind of go back to, where I bought this back in 2021 and around 114, and then I sold it. Kind of sucked to sell it at a loss about 102, but then I was able to kind of go back and use this as a teachable moment for why you don't let this thing go all the way down to $30. Still hasn't even recovered from where I bought it or where I sold it this many years later. And so this is capital that you could have put into something better. And so there's many examples of this, and why just that 50% of a major trend, that's the pullback, that's the dividing line. And then what you want to do is you want to give anything about this much risk, and then if it goes up, you're in great shape. You can just let it ride. Like the trade sized stuff for this year has been MMC, which again was at 50% here around 209, and this is about how much risk I took for that low. Took a little bit of profit off at 221, and now I'm letting the rest ride. Hopefully it'll break the top, and it'll keep going. But give it that much at a 50%, and then let it ride. If it breaks it, get out. Put the capital elsewhere. It's just, I would maybe get into fundamental analysis, but I don't think it matters anymore because, everything's trading at such a high price to earnings ratio. That doesn't matter anymore. You talk about, well, the company has guidance. Well, that's just a speculation in itself. They could miss the guidance. They could do better than the guidance. I don't see any other way other than using charts to kind of lock you into a risk profile where you demand of yourself an asymmetric risk. And things like if you buy something like Palantir at a single digit, and you bag hold it, you say like, okay, I've got 100, 200 shares of it. It's the company will go out of business. Okay, I've got a few $1,000s on it, and then you just kind of leave it alone, and then you also don't mess with it. You don't, you're like, oh, I want to sell this. I want to take the profit. No, just let yourself win. That's it. Well, Palantir just let yourself win. I don't know when it's going to stop, but I have such a low cost. Same thing with Nvidia. I'm playing with options, trying to get clever and short it. But I bought this thing, a lot of it back in 2020. So I don't care. I don't care what it does up here. But that takes years. That takes years to develop. That takes patience, and that's the key. So, big data defense contractor. Yeah, ACM. All right. Got symbols to look at, guys. Post them in the chat. We'll finish up with my VIX trick, which I've talked about before, but we need to talk about it. It's very, very useful. ACM, AECOM. Got a little short-term 50% here, do we? This is on the daily, or this is the weekly. Okay. No, it's a weekly, yeah. I like this. Let's do the volume profile of it and see what if we have some basis here. Kind of all over the place there, but there's where you kind of have a little bit of a place where it might flash to 96.64. So this would be when we're talking about asymmetric risk reward. If we bought it here, which is, by the way, this goes on my list. Thank you very much, Coffee Guru. You found me some good stuff. Were you also the one? I don't know if you brought up Hershey's. I don't remember if that was you. It was different people in Discord brought up Hershey's for us, which is doing pretty well, I think. It's not meme stock. It's not crypto, but it's definitely up. I think 120 something was 120 was definitely what I had my nieces and nephews put into my their accounts, their custodial accounts. Yes. So it seemed Hershey's, buy some candy for the kids. I have a little custodial account. They got Disney in there. They got Tesla, of course. Well, because you have to have Tesla. But I kind of want them, when they turn 18, to be like, hey, Uncle Norok, he put this money aside for you, and they'll be 18. They'll be like, cool, beer, or cool makeup. I don't know what my niece is going to want, but hopefully they can appreciate what happens over 15 years of companies that didn't go out of business. That's what I want them to learn. So hopefully they'll learn that. I'm just getting older. I'm not old, but I've been doing this for over a decade now. And man, it really is just the Warren Buffett stuff, guys. I mean, it takes time. Nobody wants to hear that because people want to be rich now, but it's just that's what it is. It just takes a long time. Yeah, so this would basically be a good risk reward, because what I would use here is this volume profile here is the place it would flash to. And so what that can do is okay, that's how much we can give it for our risk, about let's say 5%, and based upon that, we can get a 3-to-1 up to, again, I don't play the high because sometimes they can be really cheap with you, but yeah, so around 117, that little thing. Yeah, this will be a good way to set this up. ACM, this is the one, right? For some reason, it's ADM I was thinking, the Archer Daniels Midland. Okay, FIS, Fidelity. I like things at a discount. Ooh, is this going to be a 50%? I like it. I love this earnings. I love that you've got that spike there, so you can kind of define your risk. Oh, coffee, man. I do this for you, man. I do this for you because you're doing so much for me. I can't look at everything, but I appreciate. How do you find these stuff? Are you just looking at this stuff, or do you have alerts? Tell me your secret for finding these things. You're welcome, Wald. That's why I do this. I'm happy to do it. I'm happy to give back. I think this stuff is useful. I don't think chasing memes and I don't think YOLOing and yelling, moon is going to work for a lot of people. I want to find stuff when nobody wants to buy it. I want to find stuff that's cheap. I don't want to buy it low. And then when it goes up high, if I don't own it, I'm going to stay away from it. Oh, I got something to say about that. Let me do the volume profile real quick on this one. You got a volume profile at the gap. You got this is good. I like this. And then of course you got that. So you got that's holding up. That would be close to the high. Throw that in there. I like it. I like it a lot. We actually had a Truist is a financial company. We had a little 30-minute spike in here today, but it didn't really tickle my fancy for going more long. But yeah, Monday, those are ones I'm going to look at. So yeah, PEGA, ACM, and FIS. We're gonna look at that. I wanted to set up a new Robinhood account to sort of have that, that graph that everyone looks at, and of course do I keep talking about this, the live stream portfolio for ones that we've come up with live stream that we've traded based on Discord, and I've got my positions over my accounts. I want to consolidate them into what are we doing. Uh, we'll see about that. The problem is you can't have multiple accounts on Robinhood. They really shoot themselves in the foot. Because I have this Robinhood account that has like stuff from 2020. I basically put you remember in 2020, you Americans, we got like a stimulus check for, the pandemic. So I decided I'm going to put the stimulus check into the stock market, and then we're going to see what happens. And so that my Robinhood account is my stimmy check, and it's grown. It's almost, I think I checked, it's getting close to doubled at this point, which, that's because I didn't put into, massively YOLO stuff, but it's just had a nice appreciation over 5 years. It's doubled in 5 years. So, yeah, I think a lot of stuff I put in, there's like Costco, there's some Tesla in there, maybe more than double actually. But it was just sort of like a play thing. But I mean, honestly, Robinhood, the margin rates are better than anyone else out there. And Robinhood actually had a really good earnings. And this I'm kind of missing out on, as Jen knows. I don't own Hood stock, and I've liked it for several weeks and months now. So I don't know. I do know why I haven't done it. Oh, this goes back to the IPO thing that you asked earlier. Who asked that? Wolf, did you say? Okay, Wolf. So this is why you don't buy an IPO. Okay? Because you got to understand what IPOs are. And we haven't had a big IPO season in the last several years. The reason we haven't is because the big firms on Wall Street know. They know to do IPOs when everyone is super bullish. And when were people super bullish? 2021. Most bullish stock market that I've seen. Made a new high every month. The SPY did. And that's when you had all those IPOs, didn't you? That's because they know that people were throwing care to the wind. And you got to remember, IPOs are not to make you rich. IPOs are the initial investors, the angel investors, the venture capital, etc., cashing out to retail people. It's to make them rich. That's literally what an IPO is. It's to make people that had money more money. It's not to make you rich. It's not an opportunity for you. It's an opportunity for you to give them money, but it's something where you want to be patient. I mean, Hood, Palantir, IPO'd at 9, came all the way back down to the IPO price. I mean, you're always going to have this single day, like, I got to get it now. And that's what everybody does. You don't do this. You know better. You let everyone else do stupid stuff, and then you get it at a much cheaper rate. One thing that you got to look back on is Meta. That's Facebook. Facebook is what it is today. Ask yourself this. Remember we were talking about long-term stuff? Do you need to, this is all split adjusted, but did you need to buy it at $38 to now have it at $720? No. You could have waited a few days. Or what I say is basically take the high of the IPO, let it get above it, boom. Let it actually break the high, do a pullback, just a typical high breaching pullback. And so with Hood, if we take a long-term perspective, if we think this company is going to be around forever, if we're patient enough, even though it's doing a crazy run now, I can be patient enough to wait until it gets over 85 and then think and know, years into the future, 10 years into the future, this thing could come up in here and then go. Now, of course, I'd like to have it cheaper, but I'm not going to buy it at this point. I'm going to wait for it to pull back. One of the reasons is because the earnings, the growth they had that caused them to be up, 15%, I think it was that they had just blowout revenue, mostly on crypto over the last quarter, like quarter of 2024. And that was after the election. There's so much money to be made in crypto because you can't actually make any money on stocks because most stock brokerages, they're free commissions. But crypto, on the other hand, nobody seems to care how much money they spend trading crypto, do they? Because they're going to make a lot of money, right? So you can charge kind of whatever you want, either in commissions or spreads on crypto. So it's a very, very high margin business activity for Wall Street. That's why BlackRock did the ETF. It's not because they believe in Bitcoin, it's because they know there's money to be made in people that think there is. So I have a fundamental perspective that I think that this might be a one off this past quarter in crypto. If the year, again, we talked about this earlier, the price, the halvening price cycle, everyone agrees is going to end this year. That means that Bitcoin is going to go down. That means that every crypto is going to go down because Bitcoin is crypto. And I don't think the revenue is going to be there. But then in a few years, it will be probably again. These things go through cycles. And so I'll look for a hood on a pullback. So speaking of things you got to be patient and not jump into, I've been saying on Discord and to some friends, like gold. Gold has been breaking out. I can't ignore it. But I almost had to like sit here like, and I was reading on Twitter X all these people posting charts of physical gold storage at different places like vaults and things like that. They're like, oh, people were caught running on gold. People were like draining the vaults. There's going to be a run on gold. And I'm reading this, and the first one I read, I'm kind of like, okay, this is a data point. Let me pay attention to this. Do I need to acknowledge this? Is this significant? And then as I scroll and I constantly see it, Zero Hedge talking about it, all these other people like, oh, there's a run. There's going to be, this is big. Buckle up. When I start seeing those posts pretty regularly, that's actually when I'm like, no. We're not going to buy it. No, we're not going to buy it. We're not going to. I think I was actually seriously looking. I was actually just going to order some physical gold actually because why not? Like, if you're going to own gold, might as well have the bars. And from like I think Sam's Club or Costco is actually the best place. Don't buy those. Don't buy it from those refiners or whatever you see advertised. They always have like a 20-30% markup. It's ridiculous. You can just go to Costco and get basically the spot price. By the way, did you know that? Yeah, you should. Yeah, don't ever like. What is it like? Hold on. Buy gold. Or actually, let's look at Peter Schiff. What does Peter Schiff sell gold for? He's been having it. He had a little victory lap as gold was making new all time highs, but Bitcoin wasn't. So it's not Birch. No. Where's Schiff Gold? Schiff Gold. What? Did they close him down? Oh, there we go. Schiff Gold. Okay. So buy gold and silver. How much is he going to charge me to buy? What? Oh, shut up. I don't want to talk to you. No, I don't want to talk to you. Oh yeah, see, I can buy an ounce of gold from him for $2,979, whereas at Costco, I can get a 1 ounce. Oh, they're out of stock. Oh no, there's a run. No, you can find something here. There were. Oh, I needed to be logged in. 1 second. No, I'm silver. Hang on. Hold on. I can log in real quick. But I don't want to show it because it's not mine. It's my friend's account. Let's just see the difference. Then we'll move on. I got to talk about the VIX here. If you guys got more symbols, put it in. Yeah, we're coming close to the hour. Okay. Gold bars. Okay, so gold bars are 2,949. Still cheaper. I think they haven't updated for today's big move, and so yeah, it was up there. So we'll have to look at it when it's like in real time. But yeah. All right. Ulta and PayPal. think I've looked at this before. I would love to get the Becky index started up again. That's where you just buy stocks that make stuff that white women buy. It's held 340, 48, 41. That's good. Just don't let it break below there. It's holding. If you're long that, I wouldn't be mad at you. PayPal. PayPal is something I'm kind of neutral on. Actually, I've got it marked off here. 70. Oh, look at that. I actually have this marked off. Did it hit it? I bet I had. I think I have an alert at 75.32 that it didn't hit this week. Interesting. That could be the pullback I've been looking for on earnings. Yeah, that looks pretty good. I need to kind of get this on right. This might be worth something. All right, Coffee Guru. Look for retracement using the screener. Does it okay? So when you do the screener on TradingView for retracement, is it based upon like its 52-week high? I bet that would work actually. Typically, maybe, right? Or is it based upon the indicator that a mine can? All right. I want to put it. I teased about the VIX. I want to talk about that. We might push that off till another thing. But you guys got to be ready for this when it happens. Okay. That's why you got to know this. So VIX. Coffee Gear, when you get a chance, tell me what you're doing. I need to look. Make me not be lazy. I probably need to be doing these scans as well. Let's see. So IV and again, recap. VIX volatility index is the average IV implied volatility of the S&P 500 index ETF SPY for 30 days. That's the average, put together all of them 30 days out. And it's a very good indicator of fear in the market. And right now, IV is, well, relatively low. It's kind of at the bottom here. You'll find that it kind of gravitates towards the bottom here. It's not as lack of fear as it was in summer of last year, because summers are kind of boring. But you saw here, like in August, this big old spike up. That's fear entering into the market. And that ends up being a good market timing signal. But you're like, well, yeah, it's fearful, but how do we know where it'll stop? How do we know what's going to happen? Well, go back and look at 50%. You take it from the 50% of the high of just the most recent time down to its low. And while that spiked above it, by hitting it there on August, you knew that was going to be potentially a market bottom. So let's bring this up right here. And then, of course, what we can do is we can extend this to that now being our current high to here. But more importantly, it had, let's see, there was where is it? More recently, you had this high in December. So you take from there to there, and the January 13th dip, buy the dip, happened right at that 50%. The next one was this one here on January the 27th. Now, this becomes a lot more prominent if you go back and you do these 50% in the past. I think one of the things you can really look at, let's go to the weekly here on the VIX, is you had the big 2008. That's the big one. To there, down to the low there, and boom. It predicted the August of 2015 almost, let's see, what is it, about that many years later? A whole 7 years later, boom, August 15th. Let's bring it up here. Was that a low in the market that day that it hit that 50%? Yes, it was. I mean, spoil you here, but boop. Basically the beginning of that double bottom right there. Mm-hmm. This crazy, scary time right here. Market actually, I think it dipped pretty low. It kept going down for a retest, but that was where if you would have bought stocks across the board, you would have been pretty good. Update a little bit. There's another one up there. basically take it to the low there. So that 50% on January the 18th, that was after, I believe, the Holocaust, or Volmageddon, as they say. So, yeah, boom, right there. So VIX has this really cool tendency to respect 50% retracements. And so what I'm looking for going into the future is an IV hit. I got an alert at 40.10, because that's going to be based upon the last major move up on VIX volatility, and that's going to be a very good potential market bottom to time the market, allocate some capital, and whatever's causing it is going to have everyone in the news talking about how it's the end of the world, and that's where you have to step in when there's blood in the streets or when people are being fearful, be greedy. But this is how you can kind of chart it and say, like, okay, is this really fearful or could it get worse? That's another way you can look at it as well. So, all right. What are the specific settings? I'm getting a lot of penny stocks. Oh, yeah. Well, maybe you can select the stocks by just S&P 500, because that's all I really look at is the stuff in the S&P 500. Is good. That's 500 stocks. I don't think you really need to look at more than that. All right, guys and gals, if anyone actually is a girl. Thanks for hanging out. I had a great time talking and teaching. I hope you got a lot out of this for options. Kind of the takeaway that I want you to think about is I want you to own shares, because I want you to get rich. I want you to get wealthy. Excuse me. I want you to get wealthy by owning shares. But right now, with implied volatility where it is in the market overall, but also in individual stocks, look for stocks that have low average implied volatility. Look in your platform, if you're whatever you're using, and see if it has an IV rank or IV percentage. I'm going to see if we can maybe get it in TradingView now, but it hasn't been able to find. Actually, let's do a quick look while I got you here. Tesla, and I know somewhere with Tesla we can do options. Do you have volatility? You have it for, is this the average of implied volatility? Can you pull volatility? Let's see. No, maybe not. I don't see it in PineScript version 6. TradingView, PineScript, implied volatility. All right, well, let's close it out. These are ones where people kind of calculate it. It's not it. All right, one of these days, TradingView. All right, thanks guys for hanging out. Hope you have a good weekend. Hope you learned a lot. Make sure you like it if you did. And join me on my Discord. I love to answer questions there, and I post the trades when I make them. And also, we got good people like Coffee Guru and others that help me find opportunities for you guys. So that's what it is. I like to crowdsource a little bit. We got some stuff to look at next week, so I'm really happy. Have a good weekend, everybody. We'll see you next week.